Welcome to today's market report. European stock markets are seen opening lower on Thursday as investors fretted about the lack of progress in the talks over a new US stimulus package, while mounting coronavirus cases continued to weigh. The DAX futures traded 0.4% lower at 12,500. CAC 40 dropped 0.5% at 4,800. FTSE 100 fell 0.3% at 5,700. Optimism surrounding the potential for a new coronavirus relief package dissipated late on Wednesday after President Donald Trump accused Democrats of being unwilling to come to an acceptable compromise over the size of the package. While Trump had previously said he was willing to accept a large aid bill, it was clear that there was also deep opposition among Senate Republicans to such a hefty stimulus bill amid worries that it could hurt their November election prospects by adding to rapidly rising budget deficits. That said, the two sides are expected to continue talking later Thursday in what looks an increasingly unlikely hope that a deal can be reached before the November 3rd presidential election. Neither side wants to be portrayed as the villain in this drama, so both are appearing to be constructive, while simultaneously dragging their feet and counting down to the closing credits. Meanwhile, the coronavirus pandemic continues to play havoc. Spain became the first Western European country to exceed 1 million COVID-19 infections on Wednesday, doubling its tally in just 6 weeks. While in the US, the number of COVID-19 patients in the country's hospitals hit 40,000 for the first time since August, according to a Reuters report. Earnings from the likes of Unilever, Michelin, L'Oreal and STMicroelectronics will be in focus on Thursday, while a fall in the German GfK Consumer Climate Index for November may weigh. Oil prices weakened on Thursday, adding to the heavy losses from the previous session, as official inventories add to worries about the outlook for fuel demand given the surge in COVID-19 cases. Crude futures traded 0.9% lower at $39.81 a barrel. Brent contract fell 0.4% to 41.55 after falling more than 3% in the previous session. Elsewhere, gold futures fell 0.7% to $1,916.45 per ounce. On the FX front, GBP USD eyes a break above 132 amid Brexit optimism. The spot hit fresh 6-week highs of 130.178 before correcting towards 131. The major has confirmed a bull pennant breakout, as well as a golden cross on the hourly sticks, opening doors for a test of levels above 133. On its journey northwards, the GBP bourse could face an initial hurdle at Wednesday's highs of 130.178, above which the psychological 132 magnet could be put to tests. On the flip side, the upward sloping 21-hour hourly moving average at 131.31 is likely to offer immediate support. The pattern will likely get invalidated should the price close below the falling trendline support at 131.19 on an hourly basis. Chief EU negotiator Michel Barnier is leading a large delegation to London to resume and intensify Brexit talks. UK Prime Minister Boris Johnson returned to the negotiating table 5 days after abandoning it, now aiming to clinch an accord by mid-November. The Bank of England's Deputy Governor Dave Ramsden cited fears of a further hike in the unemployment rate, while also suggesting that wage growth could also falter as the pandemic continues. Additionally, the coronavirus woes in the UK is increasing day by day, which in turn pushes John Edmonds, a member of Scientific Advisory Group for Emergencies, to say, "We are going to have to live with this virus for evermore. There is very little chance that it's going to become eradicated." On Wednesday, The country marked 26,688 cases with 191 deaths within 28 days of a positive test. This pushes the British government to plan COVID-19 challenge trials that deliberately infect volunteers in search of a vaccine. Euro-dollar corrected lower and hovered around 1.1840 on Thursday. The pair sees a mild correction from recent tops around 1.1880 in the wake of the opening bell in Euroland on Thursday and amidst a renewed pickup in the risk-off mood, particularly in response to stalled discussions around another US fiscal stimulus bill. The European Commission will publish its consumer confidence gauge for the current month. The outlook of the euro remains positive. The dollar index was up 0.1% at 92.713, rebounding a touch after falling to its lowest level since 2nd of September. This is today's market news. Thanks for listening. We'll see you next time.